Hi, this is John Persinos, Editorial Director of Investing Daily, with a video presentation for Monday, December 6. To view our full range of publications and trading services, visit our website at investingdaily.com. Also visit the website of our subsidiary, streetauthority.com. We're witnessing greater volatility in financial markets as the pandemic's latest mutation sows fear. Here's what we know and what we don't know as we head into next year. First, let's start with a quote from Winston Churchill, a personal hero of mine. Churchill is considered the epitome of human persistence. During the darkest days of Britain's confrontation with the Nazi menace, then British Prime Minister Churchill famously said, "If you're going through hell, keep going." Those words apply to the world's stance toward COVID and its inevitable mutations such as Delta and Omicron. And through it all, despite the uncertainties and volatility, the bull market in stocks has just kept going. To be sure, the emergence of the COVID Omicron variant triggered a renewed bout of volatility last week in the markets, with sharp intraday swings stirred by headlines about the pandemic. Yes, you should brace yourself for continued roller coaster action as Q4 unfolds and we transition into 2022. But as I'll explain, I'm generally bullish about the stock market's prospects next year. Adding momentum to the ups and downs of financial markets was testimony to Congress last week by Federal Reserve Chair Jerome Powell, who expressed greater concern about rising inflation and intimated that the Fed may accelerate the pace of its tapering of assets. In addition to Omicron's evolution, the big concern of the coming new year will be the extent of inflation's intensity. Largely due to uncertainty over Omicron and inflation, stocks closed out last week lower. See the following table. Omicron is a variable with many known unknowns. How contagious, fatal, and lasting is the mutation? But to use an expression from my days in the newspaper business, there's a hook to hang your hat on, and that hook is vaccination. Health officials are suggesting that new or reformulated vaccines stand an excellent chance of providing protection against Omicron. Moderna last week indicated that the vaccine maker is working to roll out a reformulated COVID vaccine against Omicron early in 2022. But Omicron has spooked investors, with stocks sharply gyrating last week between green and red, with the S&P 500 moving more than 1% in both directions in each of the last 6 trading days. That's pretty volatile. Until the world gets more definitive answers about Omicron, this volatility is likely to continue. And yet, cases of Omicron so far have been relatively mild. What's more, no one expects a repeat of the worst of the pandemic when infection and death rates soared and lockdowns ensued. The same murky picture applies to inflation. It's unclear when inflation-causing supply chain disruptions will end and how, quote, sticky inflation proves to be. But amid these unknowns, we can derive tangible encouragement from projected corporate earnings growth. According to research firm FactSet, the Q3 2021 earnings per share EPS growth rate for the S&P 500 on a year-over-year basis came in at nearly 40%. For Q4, analysts are projecting EPS growth of 22.4%. For calendar year 2021, analysts are projecting EPS growth of 44.1%. The bottom-up EPS estimate for 2022 is $222.32. That's pretty good. If that figure turns out to be the final number for 2022, it will mark the highest annual EPS number for the index since FactSet began tracking this metric way back in 1996. See the following chart. What's more, after almost 2 years of coping with the pandemic, consumers and businesses have adapted and they're less likely to retreat into a defensive crouch. The stock market has been volatile, but its upward trajectory has continued, a sign that Wall Street has adjusted its attitudes as well. Another known positive is global economic growth. For its latest projections, IHS Markit says global economic growth will continue in 2022 and into 2025, albeit at an uneven pace depending on the region. Take a look at this chart. My expectation for next year is that economic expansion, earnings growth, and consumer spending will continue to remain strong, providing powerful tailwinds for equities. These economic trends add up to favorable conditions for cyclical sectors. They're smart bets now. And when pandemic-caused uncertainties eventually wane, these economic reopening plays should enjoy even better conditions for appreciation. but maybe you'd like to avoid further volatility. Are you looking for a trading methodology that withstands pandemic unknowns and provides big gains no matter how the coronavirus or inflation play out? Visit the URL you see on your screen right now. Well, that's it for now. Thanks for watching. Stay invested and please stay safe. I'll see you again with a new video next week.